Hello everyone, and today we're going to talk briefly about how the premium rates depend on your underwriter's appraisal of each risk when you're taking an insurance policy, a cover for insuring yourself against any potential risks. So before starting, I'd just like to make the usual request. Please do like and subscribe this video and our channel. Subscribe to our channel so that we can keep updating you. And yes, so coming back to your cover and your insurance policy. So this is some of the basic factors which the underwriter, the insurance company, will use in appraisal of each risk, depending on which your premium rates would be. Now, one is the extent of the cover sought by the assured. So what all are you going to cover yourself for? Like, would it be an all risks cover? Then the institute cargo clause A would come into picture. It would have some exclusions, but having said that, you can still add some risks. You can add it onto your policy for an extra cost, so that raises the premium rates if you want to be covered for some other risks which would normally be in the exclusions, even if you did take an all risks cover. So that's very important for you to know what the exclusions are. Although it says all risks, so do have a look at all the exclusions. If you approach myself or someone, some insurance broker, we would tell you about all these exclusions before you take the cover, and then you would be given a choice. Like, we can tell you that, see, these are excluded, but for these you can take them as an add-on. And you, knowing the nature of your the transport and the journey that your products will be taking, your cargo will be taking, you can say, hey, listen, I might want to take this, I want to be covered for this, so we can add that on. Then the destination. Now, some destinations will have greater or even lesser risks of a delay, pilferage, theft, or political disturbances. It depends on where that. For a good example at the present is this war. If you're trying to send stuff to Ukraine, for example, or there are some places where there's always some civil tension going on, that's where the insurer, they will insure you, because that's what their business is. They're in the insurance business, and that's how they make their money, by the premium rates that you're giving. But the premium would be less for where the risks are less, because if there's a big chance that you are the one who's going to make a claim later, and not the others who are sending the cargo to lesser risk places, then it's just how insurance works, and common sense really, that you will be you are more at risk, so your premium rate will be higher. Now, the routes coming from it's very similar to destination, but not very similar, because your destination might be safe, but the route which you're taking, there might be delays and route deviations. Now, those which are beyond the assured's control, beyond your control, they will be covered. And although there will be a time limit, you can't deviate indefinitely and delay indefinitely, so it will be mentioned in a clause, the time limits. Obviously, when we spoke about destinations and shipping routes, there will be some histories related to claims in those destinations and those shipping routes. But there'll also be some history related to particular products, especially those having inherent vices. Like we're talking about food and agricultural products, which can get damaged, obviously, and they will have special needs as well. So special needs could be timber. The timber needs to be protected from rain, heat, disinfected. Okay, so if there's a chance, like even grain, for example, there's a chance that there could be some rodents or pests, then it is, while it is the transporter's responsibility and the carrier's responsibility to make sure that it remains out of risk and remains disinfected. But also, if you're going to make an insurance policy to protect yourself from the risks of damage, so that can be done. But then the history will also play into the premium rate, how much the premium rate is calculated. Okay, now seasons. Now this is self-implied, where cargo is more susceptible to sweat or weather damages, and the packing or the storing methods. Vessel characteristics and salvage possibilities. Before that, briefly about the seasons and the packaging or storing methods. Seasons we can understand, because when there's a chance of ship sweat or cargo sweat, then there's more risk. So there's that a common thing which seafarers use when going from hot to cold: ventilate, hold. So, and cold to hot, ventilate not. So that's they're professionals in that. They know what to do. But we're just mentioning briefly about the sweat, cargo and the ship sweat. And the weather damages, obviously rain could get into the holds and make some damages. The other thing, okay, now the packing, storing methods. Now this is very important. Obviously the insurance company will not be very proactive, or they will not actually go and get out of their offices and go and have a visual look of how you're packing, storing your cargo. But it is in their interest to minimize risks. So this is what they will take into consideration: a history of packaging and storing, and they know, they are very well aware of how goods are stored generally. So, and therefore, if they know what goods you're taking and how, they can pretty much figure out like how to appraise that risks and decide on the premium rates based on their knowledge and the history of such cargoes and such routes and such packaging and storing methods. Now the vessel characteristics, on what kind of ships that you'll be sending your cargo, and the possibilities of salvage, which is if in a certain route and going towards a certain destination, the salvage possibilities are not that great, would mean your risks are more, obviously. And similar, the vessel characteristics, what kind of vessel is going in. Now the next thing, yes, so the premium rates are a percentage of the insured value of the cargoes. That's how they will tell you this is what your premium would be. And insurance companies can either play safe and say no to many cargoes, which they will not, because they are in the business of making premiums. They offer you a policy at a premium rate. So they should be encouraging you at your adventure, maritime adventure, or your enterprise, whatever you're doing. And therefore, the more risk you're willing to take, the more premium rate for them. So I would assume that an insurance company will encourage you to take insurance from them, but at the same time, they have to be realistic, and they have to make sure that they don't make a big payout. And as you usually know that when you claim for a settlement, that's when all the fine print comes in, and that's why this is our encouragement to yourselves to get to an insurance broker. I would say an assurance broker, because that's what I am into myself. I try to mitigate risks and minimize risks and advise accordingly, and then make sure that when the time comes for a settlement, we are beside you, so you can get your settlement sorted as soon as possible. Thank you for listening, and hope to hear from you. Thank you.